Hey, Anthony Pietrobono here. In today's video, we're going to talk about why I personally see Tesla stock going to all-time highs by the end of October and beginning of November. If you're interested in building your wealth through stock market investing, then consider subscribing. On this channel, I post videos weekly about stocks and personal finance to help you achieve financial freedom quicker. If we bring up the charts, we can see that Tesla stock has massive rallies of people going into doing some short-term trading leading up to an event. We have traders who are buying the rumor and then selling the news. That's why we saw a massive sell-off on Battery Day. We saw a huge run-up towards Battery Day, sell-off. Before that, we saw the S&P 500 potential inclusion. There's a big run-up to that, sell-off. Before that one, we saw even the Tesla stock price split, the 5-for-1 split, massive run-up on the news, sell-off after that. Now we have Q3 deliveries released, all-time record, smashed it out of the park. And we see a sell-off in the stock for multiple reasons. One of them being Trump's diagnosis with coronavirus and potentially looking like his health was worsening. We're seeing a bounce on it Monday morning as I'm recording this. I'm anticipating another massive run up until Q3 earnings are released. That could be the Wednesday of October 21st or the Wednesday of October 28th. One of those weeks, we're gonna see Tesla release their Q3 financials. We already know they're gonna be releasing record-breaking revenues and likely record-breaking profits. This alone is implying that we're gonna see a run-up of short-term traders buying right now, all the way up until earnings is released. We can honestly see Tesla reach all-time highs, $500 a share or more, leading up to Q3 financials. The average analyst consensus was 136,000 deliveries. That's what was predicted by most of Wall Street on average. Tesla beat expectations but didn't smash expectations. That was combined with a poor macroeconomic situation like we saw on Friday with a sell-off. So we saw Tesla continue to sell off, down 7% on the Friday. It was a big dip, and we are seeing everyone buying the dip on the Monday. Now, in the future, we're gonna see more buying leading up to Q3 release because we're gonna go over some potential numbers now. In my opinion, one of the reasons that a lot of people are holding off from buying Tesla stock is because Tesla's guidance is 500,000 deliveries for 2020. Now Tesla will have to deliver 181,000 vehicles in Q4 to meet their own guidance. If they do meet their own guidance, we will see the stock be absolutely insane. The reason why it's not is because there's a lot of skepticism that Tesla will be able to deliver 181,000 vehicles when they just smashed their own personal record and delivered 139,300. Two things that people aren't really taking into consideration is the fact that the Shanghai facility is fully ramped for Model 3 and they're adding in the Model Ys now for delivery. So we could see Model Ys being delivered in Q4 in China, which will add to their own production. We're also seeing another shift added and people are being trained in Shanghai to be able to produce more vehicles to get closer to producing that 180,000 vehicles and selling those. And we're also seeing in Fremont, we're seeing a retooling and we're seeing more optimization to be able to increase production. This is all going into Q4. So we're seeing these methods to increase production. Q3, Tesla produced 145,000 vehicles. They sold 139,000, which means there's thousands of vehicles on backlog, which means that Tesla will have to likely produce around 175,000 vehicles in Q4 and sell all the vehicles to be able to deliver 181,000 vehicles in that Q4 and meet their own guidance. So it is definitely absolutely possible for Tesla to produce 175,000 even though they just produced 145,000 in Q3. And then it's also possible to deliver 181,000 because they had a Model 3 price cut in Shanghai, which is unlocking a whole new level of demand for consumers in China. And we have Model Y ramping, so we're having more sales there as well. And Q4 is a seasonally strong quarter. We also see Tesla who they're getting better and better at their delivery process, more and more efficient at delivering vehicles quicker. So all this combined makes it increasingly likely that Tesla will reach their own 500,000 vehicle delivery guidance. And this would put Tesla at almost a 40% year-over-year growth from deliveries, coming from 368,000 to 500,000 vehicles delivered from 2019 to 2020 through a pandemic. 40% growth year over year through a pandemic when the rest of the auto industry is falling 20% or 30%. This is an absolute game changer. The second catalyst that would push Tesla stock all the way past all-time highs in the near future now would be the confidence in the S&P 500 inclusion after coming out with a stellar, massive profit in Q3. Let's take a look at some potential numbers that Tesla could release for Q3. Shout out to Gally from Hyperchange. I'm on Hypercharts right now. So if you take a look at the vehicles delivered for Q3 2020, this is the massive spike, nearly 140,000 vehicles broken down into segments. The green one is Model Y. So you can see just how much Model Y opened up for their own market. Q2, the previous quarter, total revenue was 6 billion. The quarter before that, total revenue was 5.98, basically 6 billion. And then Q4 2019 was their highest revenue, 7.38 billion. If we take a look at how many vehicles were delivered in Q4 of 2019, we'll see that it was 112,000. 112,000 vehicles delivered in Q4 of 2019. This quarter, 139,000 vehicles were delivered. Now let's take a look at net income. These are the last 4 profitable quarters. Q2, $104 million profit, 16 million profit in Q1 2020, and then Q4 2019 net income, the net profit was $105 million. $105 million net income profits that we're seeing with 112,000 vehicles delivered, with a revenue of just over 7 billion, 7.38 billion. Now, what we could be potentially seeing is revenues of 8 billion or more, likely over 8 billion, closer to 8.5 billion. If we assume that the operating costs go up slightly, if we assume that R&D budget goes up slightly, if we assume that the average selling price per vehicle has dropped a little bit because of price reductions and more buying of cheaper models, then we could still see definitely over 8 billion in revenue, potentially 8.5. So if we do some quick back of the napkin math, it's very easy to see that we could be easily seeing $500 million in profit. $500 million in profit in Q3 2020. This could be the shot to the S&P 500 where they actually see that Tesla can be consistently profitable and include them. And with that, the market, everyone else in the market will also see these numbers released and have the same thoughts. They will say, hey, S&P 500, they're highly likely to include Tesla now with this massive amount of profit and 5 profitable quarters instead of 4. Then they're gonna buy into that hype and we could see this stock go up even higher after earnings. So what I'm seeing is a run up to $500 per share by the earnings release. On earnings release, we could either see a sell-off because people bought in the rumor and then they sold the news, just like the past Tesla events. And then the following month up to that, if we get that S&P announcement, then we could see $550, upwards of $600 a share 1 month after the Q3 financials being released at the end of October. So in my opinion, we can see end of November a $550 a share price, possibly $600 if Tesla also releases that full self-driving rewrite that Elon has been talking about, where he's saying that autopilot is like 4D. It's reading things in 4D now, not 3D, 4 dimensions, because they're adding time into the equation. It can read video, not just still images, the autopilot. So you're taking video and actually integrating it and seeing that and then making decisions based off video, not just making decisions off of a bunch of still images and putting them together and making it seem like video. This is apparently going to drastically improve the experience with autopilot. The trend for operating expenses has been going down. We've been seeing Tesla actually getting better and better. They are spending less and less and getting more and more done. This is amazing to see. So we should be technically seeing the expenses being around the same, being around 1 billion. However, I am going to just put into my calculations that we're gonna see an extra 200 million likely, and it'll go up to 1.1 billion. If we still factor in that $200 million increase in expenses, we're still going to see at least $500 million in profit. And there's more wild cards, because if we take a look at a spreadsheet I made here, these are all the deliveries for the past quarters, and there's the profit listed for each quarter. I am seeing that we can potentially have 8.5 billion in revenue. And that would be more than 1 billion higher than our previous highest revenue quarter. That means there is the potential to see anywhere from 500 million in profit to 1 billion in profit. 500 million to 1 billion. Now there's an extra wild card because there's a ZEV credits. We don't know how much Tesla's going to decide to recognize in revenue from the ZEV credits. Now we know that they're able to recognize twice as much revenue in 2020 than they did in 2019. And the past few quarters have ranged from 300 to 450 million in revenue just in that one quarter. So we could see 300 million in revenue from ZEV credits as well. Again, all this is pointing to is, number one, we are definitely going to see the most profitable quarter we have ever seen with Tesla. Number two, this could spike and spark interest into the S&P 500. Another nail in the coffin that, hey, we're profitable. This company's profitable. We've proven it 5 quarters in a row, and we're becoming increasingly profitable. That could be the last straw where S&P includes the company, and then other investors could think that, so they could buy into that hype as well, further pushing the stock up. And we see that Tesla has a history of having these run-ups up into events like this. So I would expect in the next coming 2 weeks, we would see a run-up up into all-time highs, approaching $500 a share, and then either a sell-off after earnings are released, or we see a sell-off, like a small dip, and then the coming weeks, in the coming month, we see a new rally back up to even greater highs, upwards of 550 a share, possibly 600 a share, if we get the S&P 500 inclusion in late November. Remember, all this is just speculation, pure speculation. Don't take my word for it. This is just having some fun with some numbers and doing a small, very basic calculation and seeing where we could see the stock be in the near term. We can never be confident in what's happening in the short term because the macroeconomic could trump all this. You know, if things take a worse turn for COVID and we see things spiral down, all this could go out of the window. This is what I'm seeing with Tesla, and this is why I will continue to buy Tesla stock on red days. Thanks for watching. I hope you enjoyed the video. Give this video a thumbs up if you appreciated the information shared today, and subscribe for more financial education content just like this one. Let me know in the comments below what you would like to see more of, and I'll see you in the next video.